The world has never seen 3% interest rates. They've never seen 3% mortgage rates. So interest rates historically have never been this low. And one of the big things that's happened right now because of it is that the market is feeling the press of increased interest rates. But if you actually look at where interest rates were in 2005, they weren't much different than where they are today. And we were living through one of the strongest economies we've ever lived through. CNN Business and Sheila Blair, who actually lived the forefront of the 2008 financial crisis when Lehman Brothers collapsed and the subprime market just blew up in front of our face. She's telling us that right now the market seems extremely bubbly in the single-family residential market sector, and there's a few reasons why. When you look back at numbers in 2019 of the average median price per home, we were looking at values that were $278,000 for the average median home. Now, today, ladies and gentlemen, in October of 2023, the average median home price since 2019 has risen to a median price of $407,000. So there's a massive growth of appreciation that has happened just over the last 4 years. And we're seeing historical highs. Now, a lot of this was created because of the decline in interest rates. And I'll tell you, ladies and gentlemen, right now, what we're experiencing is only because of what happened in the mortgage industry and in the interest rate world at banking. The reason what we're going through right now is because we saw historical lows in interest rates that we had never seen before. The world has never seen 3% interest rates. They've never seen 3% mortgage rates. So interest rates historically have never been this low. And one of the big things that's happened right now because of it is that the market is feeling the press of increased interest rates. But if you actually look at where interest rates were in 2005, they weren't much different than where they are today. And we were living through one of the strongest economies we've ever lived through. But what ends up happening, what creates a bubble in the market is when supply and demand doesn't balance out. And right now, one of the big things that's happened is that the bubble is being pressed because the housing prices are not sustainable. They are growing at a pace that people cannot afford. And it was induced because of the low interest rates and because it created a buying frenzy for people to be able to get into the market at such low rates. Now, the housing supply and available homes that are on the market don't exist, pressing the housing prices up even more than they were back in 2019. So right now we're living through this. And according to Sheila Blair, she says, I don't know that any type of relief is coming anytime soon in spite of the feeling of this housing bubble on the forefront of our fingertips. And so one of the big things, ladies and gentlemen, is right now affordable housing in the single-family housing market is so vastly needed. We don't see relief coming to the forefront of anybody's doorstep anytime soon, which means the housing prices are going to continue to climb. Now, it looks very similar to the waters that we swam across just a few years ago in 2008 when the housing market was pressing this bubble. Housing prices were unbelievably high. And in fact, right now, what CNN Business is telling us is that the market right now, in comparison to 2008 and the press and need for affordable housing, is even worse today than it was in 2008 by substantial numbers. Now, with a lot of opportunity coming to the market for builders and developers, the government has supported a lot of money that's making it available for single-family home builders, multifamily home developers and builders, and you can take advantage of a lot of this as well. And until inventory meets the need for housing, I think we're going to continue seeing and feeling the burden of housing prices and affordability being pressed upon American people. The one thing that can finally turn this market around is when housing prices actually drop for some unforeseen reason, and when market values decrease lower than what people actually owe on their home, that's what's actually going to burst the bubble that we're actually being pressed on. So right now, I would call it less of a bubble and more of a expanded ceiling, right? We have this bubble that we're pressing on, and we have, like, think about it like a rubber ceiling instead of a glass ceiling. When you hit a glass ceiling, you just stop. But what's happening right now is we're pushing past this glass ceiling into a rubber ceiling, and it's expanding. And sooner or later, when costs cannot afford and they hit a maximum, and you push this bubble as high as you can in this rubber ceiling, it's going to retract and it's going to come down. And when housing prices come down, it's going to, that's where the bubble actually bursts. But in the foreseen future, it's not going to be this miraculous overnight burst of a bubble that we foresee coming towards us. It's something down the line, down the road. So for you investors, for you end buyers, and for those of you guys that are wondering how to attack this housing market in the near and foreseen future, we don't see a compression in housing prices. Continue buying, continue investing, and continue migrating forward in this economic time and get into sustainable and affordable housing for long-term holds in your real estate investment purchases long-term. If you like the content, you want more content like this, click and subscribe to our YouTube channel, give us some love, pound that thumbs up button, and ladies and gentlemen, always go out and continue compounding your success.